M&A is a big theme for biotech right now, and little wonder, with the first quarter of the year the most active for some time. More than $50 billion in transaction volume was recorded over the 3 months, the biggest quarterly sum for some time. But what makes a good M&A year? Big numbers, obviously, and assuming activity continues, 2026 could deliver that. A look at quarterly deal trends shows that M&A has been rising for the last 4 quarters, and we've already had around $8 billion announced in the first few weeks of the second quarter. When looking at this sort of data, it's always worth making sure you know what you're looking at, as people count deals differently. For this chart, I included all types of M&A deals, so that includes full company takeouts, stake purchases, all struck globally by biotech and pharma companies. There's no medtech or R&D services in there. Dig into the data a bit deeper, and you can see why investors are particularly pleased. Because a good M&A year is not just about the top line number in terms of dollars spent. There must also be a healthy volume of mid-sized takeouts, Big Pharma's so-called sweet spot, and it's when these bolt-on deals start happening at pace that a good takeout year is often declared. This next chart counts deals worth more than $1 billion in upfront value. And you can really see how activity has jumped here. It's the listed biotech companies based in the US and Europe that investors are the most focused on, so I've also pulled those out into a separate group. It always surprises me that when you do drill down like this, the numbers are actually quite small when in terms of deal count. From 1 deal in the first quarter of 2025 to 7 in the first quarter of 2026, and the XBI, the closely watched biotech stock index, has almost doubled over the same period. Whether this pace can continue is a big question for the coming months. This data is from Evaluate Pharma. Evaluate is a sponsor of Biotech TV.